Absolute Wealth. Real investors, real results.
Hubert here with Absolute Wealth. Let's take a look at the bond market. So obviously today we had a little bit of a sell-off, but nothing major, nothing real hardcore sell-off or anything like that. And we're going to look at that in just a second. So one of the trades that I think is going to be one of the best trades this year is shorting bonds, and I've been in it several times already. Sometimes I get wiggled out of it, and sometimes you nail it perfectly and it starts to fall apart. You are getting into the spot where it should bounce again because we've had a good little sell-off here. We've had a retracement up to here, and now another sell-off. So what we're going to do is we're going to draw a Fibonacci, which is just a fancy way of saying a ratio of a 50% retracement. So we're going to start the drawing from here. We're going to finish it from here, and then we're going to see a figure or a number that comes up here that gives us an opportunity where we can short the bond. So the way the fundamentals of this trade works out is just think about your house. And I know this is kind of a weird drawing of your house here. If you think interest rates are going to stay at this low rate forever, then you would place a bet that you think bonds are going to go higher. But if you think interest rates will probably rise in the future, then what you'd want to do is you'd want to short the 30-year bond or the 10-year note. And that's the trade that we're doing right here. All right, so let's take a look at an entry for this particular trade. We're going to draw from this low to that high. So what we're looking for on a 50% retracement bounce trade is we're looking for bonds to bounce to 146 and 6/30 seconds, and we want to short them in this range between this yellow and red. So we want to short them from 146 6/30 seconds to 146 and 26/30 seconds. If you don't trade futures, you can always do something like TBT, which will, if I can type TBT, there we go. You can always do something like TBT, which is in the inverse of this one, or you can do TLT, which is going to track it really well too, and those are ETFs. TLT will track it, and TBT is the inverse. Good luck. Hope it helps. I'll see you on the next video.